This section is about 3Bs and the issuances of stock to satisfy trade credit. And so we'll go over some of the questions here. There's quite a few, and excited to kind of get into this. Question number 33. Why did you issue shares to pay trade credit on Friday? The financials were due. Why didn't you wait until they were filed and digested, as the result was fantastic, and no one I spoke with so far expected such a strong result? So thank you. I appreciate the acknowledgement of the result. It took a lot of hard work, and really it was in 3 months. It was from the end of March until the end of June. That's how we shifted the whole business around. And it was really the access of that capital through the placement from long-time shareholders, and also through the convertible notes, which we optimized over a couple different tranches. So the issuances of shares on the Friday, and there's a reason why it was done on that Friday, and the main reason was because it expired. So we had authorized at 2 different EGMs the ability to issue 100 million shares to essentially satisfy trade credit debt, the debt that's due cash, essentially cash payments. So that expired on the 31st of August, and the 30th of August was the last day. So we could not wait until after the financials were digested to issue those shares. And it was critical that we issued those shares because we had really strong settlements. So as I mentioned in the past, when we issue those shares, it's usually because we have a really strong settlement. We have the ability to pay down legacy debt at a fraction of it. So essentially that's what happened on that Friday. The financials were supposed to be out before that 3B, and due to unforeseen circumstances related to the audit, the valuation didn't come back in time, and back and forth with the auditor about $149 literally was causing the delay, and it really, unfortunately prevented us from filing on Friday, and we had to file it on Monday. So that's the reason why we filed it. We didn't want to do that. We had no choice. It was painful. But when you have a settlement that is a very strong settlement, you really have to take advantage of it. So either you keep it on your balance sheet and you're not lendable, meaning lenders will say, hey, you know what, come back to us when your balance sheet is stronger. Or you take an opportunity to settle it for fractions of, a fraction of the cost with cash or with trade credit, or with shares, satisfied trade credit. So, we could have used cash for it, but I know cash is very critical for us right now because we're using the cash to deploy, so we use shares. So essentially, it was painful. I think the saying is you have to swallow razors once in a while, and that's what we ended up doing. So it was a matter of balancing. Do we lose this settlement, meaning, we have an opportunity to settle this for a lot less. We can pay it in cash, which we don't want to because we need the cash, or we can, pay it in scrip. So we opted to pay in scrip because the scrip was essentially the ability for us to use that 100 million share allotment evaporated on the 31st of, essentially the 30th of August, that day. So that's the reason why we did it. And I apologize for any pain that this has caused. Now, let's get one thing straight. I think the market doesn't know, but I watch this very closely. Now, we are very careful about who we issue this script to, and we're watching very closely. We are making sure that no one's selling this, no one's dumping it. Now, I'll give you an example. Now, if we issued about 200,000 USD worth of trade credit, shares for trade credit that day, that's a settlement already. Whatever the value of that was, the gross value of it was higher. If that 200,000 came out to market, now people are saying, oh, these guys were dumping the shares at a lower price. If you were issued the shares at 3 cents, would you dump it for 2 cents or 2.2 cents? Would you be doing that, losing even more money? You wouldn't do it. So I'm very confident when I say this, and I looked it up this morning. As of today, not a single share that we issued on the 30th has been sold. Not one share has been sold. So that tells you that it's not those 3Bs. And every time that we issue the 3Bs to trade credit, these people are very careful. They need to get their money out. They need to be whole. They're not dumping shares as soon as they get access to the shares. We watch them. It takes them quite some time to sell the shares. In fact, they haven't even sold them yet. So the whole hypothesis of, hey, these 3Bs are killing our share price, they're not. It might be the optics of it. It might be people thinking that we're diluting them. But let's talk about that a little bit too, because I'll give you a prime example. There's a company out there, a company called AdSlot. Okay, they're a good company. They're on the ASX. They've done great. They're actually one of the reasons why we listed on the ASX. They have a really good team. They have a great board, good guys, really experienced guys from Hitwise. Really good DNA in that company. The company is worth like 45 million. That's their market cap. Revenue recently was 10 million. Annual revenue 10 million. They posted a 7 million NPAT negative, and the share price doesn't move at all. And they have 1.5 billion shares, literally 1.6 billion shares on issue, 1.6 billion shares. And their average volume is, I think it's like $20,000 a day over the last 4 weeks. $20,000 a day over the last 4 weeks. Ours is 6 figures a day, average volume over the last 4 weeks. Our shares on ess are under 600 million, so they have literally over 1 billion shares issued more than us. They have over nearly less than 1.1 billion, but 1 billion plus shares more than we do on issue. So the whole idea of, hey, we're being diluted away into nothingness. The shares are not going to be worth anything. I agree that the dilution is not optimal. It's not good. In fact, I'm the one that's affected mostly by it because I'm the largest shareholder. I haven't sold a single share. I don't plan to. There's no reason for me to. I bought shares in January. We don't make a lot of money here, and this is our only source of income, so we buy shares when we can. We can't just keep buying shares all the time. We want to, obviously, but it's difficult for us. That answers another question a lot of shareholders asking over the last few months. Hey, why don't you go buy $500,000 worth of shares tomorrow to show the market, that you have confidence in the company? And I said, I have confidence in the company because I'm still here. I've been here for 12 years, and we don't have any plans on going anywhere anytime soon. So we have a lot of work to do, and there's a mission to accomplish. So that's why we're here. So essentially, the 600 million shares or 580 million shares that we have on issue is a small fraction or a third of what this other company has, and their market cap is 45 million, and they have less volume than we do. So there's a lot of examples of that. There are several companies on the ASX that have a lot more shares than we do. They have billion-dollar market caps. They have less revenue than we do. They post a lot bigger losses, and they're tech companies too. So the challenges are not related to this so much. There's a lot of other things, and I think the challenges that we're facing, and I'll talk about this a little bit in the later section, but it might be related to the blue sky and the ability for the shareholder and the company to paint the vision for where this company is going to go. Not only what it does, but where it's going to go. What's the mission? Where's the ultimate destination? So we're working on that right now. What we've been really focused on this year, and it's a good thing, but it's a bad thing at the same time. The good thing is we want it to be super accountable. Accountability is number one for us. And obviously last year we bombed it. We didn't do so well. We didn't hit our guidance. We had some people around us that we shouldn't have had, and they affected the way that we communicated with the market. In fact, they wouldn't let us communicate with the market. They said, you put out an announcement every 6 weeks, they're going to think you're a dodgy company or something like that. So you got to put it out every 2-3 months. And so we didn't communicate with the market much last year. So we're over communicating this year, and it's me putting out these things, and I really want to just let everybody know what's going on all the time. So as I mentioned in the past, you show me a US NASDAQ listed or NYSE listed company that puts out their revenue or even P&L every month. They don't. They do it every quarter. So we're trying to be pretty accountable from that standpoint. So everything we said about H1 you see in the audited figures. We said these were our revenue figures. We said 6.2 million. We hit 6.2 million. This is our profitability. In fact, our profitability was off by quite a bit. We overstated losses in the interim statements, and we were actually much more profitable than we thought we were. So, that hopefully that builds a little bit of credibility from that standpoint. And when we're really talking about that 3B specifically, it is mostly about, and very specifically about fixing the balance sheet. So if you can see, we're issuing trade credit. We're not issuing trade credit. We're not issuing stock for trade creditors for fun or for any other purpose than to improve the balance sheet. Very specifically, the balance sheet improvement is to make us lendable and to get us prime financing and options that our top tier companies have, right? So, and as you can see, in 3 months, we've improved the balance sheet by $7.5 million net assets, and the $9.8 million improvement between liabilities and assets. So the three, how many more? This is the next question, 34. How many more 3Bs are to be issued? This is the reason for the sell-off today. I think they're taking their money. I know it has to be done, but it's killing the share price. So as I mentioned, they're not selling. They still have every single share. They haven't done it. But what I think is it's really these people that are potentially shorting the stock. So we see that happening as well. That are just saying these things to get people scared, and they're scaring people. The reality of it is how is our share price so low right now when we're so many times better than we were this time last year, and even when our stock price was higher a couple months ago. So it really is just perception, I think, and miscommunication, which is a fault of mine. But at the same time, I'm trying to clear it up right now. Number 35, how much dilution is enough? We have too many shares issued already. I just answered that. I was really more of a statement. So that essentially is me saying that there are several companies out there with multi-billion shares issued on the ASX that have, bigger market caps than we do and less volume. So I think that it's just a matter of perception. I think that the register needs to turn over potentially on our side. We have like 4,000, maybe 4,500 shareholders in the registry, and from that standpoint, there's a lot of ComSec, meaning a lot of transactions that happen from there. A lot of people potentially looking to make short-term gains. And obviously we're looking to turn that over potentially to change to a little bit more long-term holding. So how much dilution is enough? So I think that we're not excited about issuing these shares, and we don't plan on issuing shares. We don't plan on it. There are settlements that come sporadically, and we have to take advantage of those opportunities. Do we have another settlement opportunity right now? As of right now, we don't. Could there be another one in the next few weeks or a few months or whatever? It is very possible. We're aggressively trying to fix the balance sheet, so I hope that answers that question. Question number 36, can you see who's selling? Is it the trade creditors? Yes, I just answered that question. So who's selling? It's really ComSec mostly. It's always ComSec, and that tells me that it could be borrowed shares, it could be just day traders or retail investors, etc. That's typically what I see. It's usually not anyone big. We have quite a few big holders that are still the same, so they're static. So most of the big holders are still the big holders. We haven't seen a lot of change in that. In fact, as the share price dipped, we keep getting emails from these big holders saying that we bought more shares, we bought more shares. So I appreciate the support and the confidence, and we're trying to be sincere and honest and accountable, and I hope that comes through. Anyhow, is it the trade creditors? As I mentioned, we watch that very closely, and for example, this last one, they haven't even sold a single share. Number 37, I feel the 3Bs is one of the factors affecting our share price, and keeping it far lower than what it should be. I'm well aware of the necessity of this to pay off historical debts, but I'm wondering how many more of these do we need to endure before we're in the clear? If there are still a few more to go, and you do not wish to broadcast that, please let me know via email. Okay, so I'll answer the latter part. I can't let you know via email. I don't want to end up in jail. So the bottom line is I can't give you information that I can't tell the market. And we've had quite a few shareholders asking questions like this. Trying to reach me on Signal, trying to reach me on a variety of different places, but I can't do that. So I'm sorry. So I have to stay out here and run the company. But the bottom line is the answer to the question, I just answered that previously. Question number 38. During the half year, the company issued around 94 million shares for settlement of legacy debt. This total value is roughly 4.4 million, and it is 5.3 million improvement or reduction for legacy debt on the balance sheet. So it's 20% less than original amount. I'm not sure about these numbers. We haven't had the time or chance to validate them. However, I don't believe it's 94 million. I think it's less, and I think the 4.4 million figure includes the last 2 3Bs as well. And as I answered in the previous section about the 5.3 million improvement, so it's not 20% less, it's an addition of 5.3 million plus a 4.5 million in net assets improvement. Sorry, in current assets. So it's 9.8 million is the improvement. So if you multiply that or divide that by times the 4.4 million, you get roughly 2 times. So the improvement for issuing about 4.4 million worth of shares was roughly about double that, 9.8 million. So it's 200%. Hope that answers that question. Also, number 39, also looking at the latest balance sheet, there's still 7.5 million of these debts left. If your plan is to continuously to issue shares to settle the debts, then I worked out there could be another 150 million shares to be issued. That will make total shares on issue to be 700 million. But are you going to do so? So as I answered earlier, I don't believe so. We don't plan on issuing $7.5 million worth of shares. That's a lot. There's only 3.7 million or so, 3.7 million in legacy debt that needs to be figured out and settled. And we feel very confidently that we can do it for a fraction of that. And it's not going to be all at once or anytime soon. It's going to be in increments as if we're doing. So just to give you some insight, we've been doing it in roughly $200,000 increments on those 3Bs over the last few months. Question number 40. The main reason to clean up the legacy debt is to be eligible for a debt facility. So if we can get green light on the debt facility, are you going to stop using the shares to settle the debts? So it's a good question. So you know that saying, robbing Peter to pay Paul? That's exactly what that is. So if you use a debt facility to pay off your other debts, that's exactly what that means. You're taking debt to pay off other debt. So if the debt goes in long-term, if it's a long-term liability, then you're moving current liability to a long-term liability, then that's okay. It's kind of like refinancing essentially. So depending on the terms of the deal, potentially we can take some of that and do that with that, but essentially what you want to do is use profit or something outside of debt to use to pay down that trade credit. Settlement is a really good solution as well, meaning a fraction of the debt. So essentially when we get the debt facility, we don't really plan on using that to settle debts unless we have the ability to stretch it over longer than 12-month period, because anything in 12 months stays in current liabilities, so it would just be the same thing. I hope that answers that question. Number 41, you and your team may have worked very hard to achieve where you are today, but the market doesn't seem to share the same view. That means that there must be something that worried everyone. I think the main one is the share issue to settle debts. In the Fireside chat video, you did explain the reasons behind it, but for the outsider, non-holder, they may not like the look of this. So I would like to hear from you. What are your plans? And if that's something you can put in an announcement, so at least we have to know the upper limit, and to bring back the shareholder market's confidence on EN1. So that's a fair question. And the answer to that was, I guess the upper limit would be, we have about 3.5 to 3.75 million in legacy debt left remaining, and if we could settle that for half, we'd be pretty happy, or less. So you got 1.8 or so, 1.9, somewhere around there. and we do that over a span of a couple years, or maybe a year and a half or so, I think it's a good solution. Now, we don't have a plan of action for that yet because we haven't settled them yet. So that comes along as the legal team ends up through those conversations with settlement. So I hope that answers that question. So that's I would say the upper limit. And as far as the market confidence and your market not understanding, I feel that there are plenty of situations that come up every day, and I get emails about them from shareholders, and there are a variety of different things that shareholders don't understand. And a lot of it has to do with the way I communicate. Unfortunately, for example, the August communication, I shouldn't have included maybe the thing about the publisher being suspended, because it didn't affect our revenue. In fact, our revenue still grew. So maybe that just kind of confused everyone. So I think that might have confused people, and that might have been the biggest impact that caused the share price to diminish over the last couple of days. Now, when we issued the financials, it could have been, I'm not sure what triggered it on the financials. Maybe it was the 3B potentially, or the scare that sometimes what I think that people do is when a 3B comes out, they sell their shares because they think that people are going to freak out, and they buy them back at a cheaper price potentially. And we've seen some of our long-term shareholders do stuff like that too. So it's hard to say. I'm not a trader, and I never have been. Before this, we took this company public, I never bought a single share. So I don't know anything about that specifically. I just rely on the information I get from shareholders. Question number 42. Are these all historical debts, or this operating cost? When will we stop issuing shares for this purpose? So it's a good question. So the majority of the issuances it's all trade credit. So a lot of it's historical debt. Some of it might be operating as well. Some of it might be related to things that are happening in the more recent term, not so legacy, something from last year or something like that. So there's always settlements, right? There's always, even though it's not legacy, meaning legacy, I would say like plus 3 years or plus 2 years or something like that, we still have settlements with publishers and vendors that are a year old or less. Sometimes we have disputes with them as well. There's always stuff like that happening in this space because publishers sometimes provide traffic quality that's terrible. And if it's not good and our advertisers complain about it, we're not going to pay them. We're going to pay them less, and less than their invoiced amount. And our terms allow us to do this, or they sign our paper. And our paper says specifically that we're allowed to withhold any and all amounts. So that happens all the time. So I hope that answers that question. Question number 43. Do you stop using shares to settle any debts once a debt facility is approved? And so, what are your plans for the remaining legacy debt? I think I covered this above. If you have questions about any of these that I didn't answer, feel free to email me after this. Question number 44. How much of the legacy debt have been settled, and how much is left? If not, obvious to see from the balance. It's not obvious to see from the balance sheet. That's correct. So as I mentioned, it's roughly about 3.5 to 3.75 million, and that hasn't been settled yet.